David Morgan with Money and Metals for the week ending September 4th, 2015. Well, let's start in the currency markets because the foreign exchange markets are very interesting. I'm just going to do a few headlines here to give the gist that most of you know already. But for example, the Mexican peso hits a new low and continues to slide. China leads plunge in global equity markets, as we're well aware of, and its currency is going lower. Venezuela, its currency hitting a new low. Canadian dollar, 11-year low against the US dollar. Latin currencies hurt by commodities drop. The Indian rupee slumps to a record low as China's volatility continues. So I think everyone gets the idea here that really the biggest dog on the block right now is the US dollar. It's been that way for quite some time. But if you look at gold prices in terms of, let's say, the Australian dollar, for example, the price doesn't look so bad. So depending on what metric you use, if you're using US dollars, of course, the gold market looks very, very challenging, to put it politely. So moving on to gold. Gold definitely got a bit of a spark here when the stock exchanges worldwide started on their downward trek. Of course, they've caught some updrafts here recently, so they're pretty volatile still. But gold in the meantime, again, reporting for the last week, the first week of September, gold eases back to a 2.5-week low after it did show some strength here. I just want to go on the record saying technically gold's 200-day moving average, I don't have the exact number. Last time I looked at a chart, which was very recent, I think it was 1184 or so. Until we get over that barrier, I'm really not going to get on the bandwagon that gold is going to go contra to the stock markets as it normally does and in my view should be doing right now. But that is not the case. However the market determines the price is what it is. And right now gold is not showing a great deal of strength. So now I'd like to move into the silver market, and I have to say after about 40 years of being in the precious metals as a specialty, certainly looking at commodities in general most of my life in all markets, certainly stocks, options, futures, and of course the physical markets, I must state that this is one of the strangest silver markets I have ever seen, which means we're seeing premiums in the junk bag market of nearly $5, which is a market that normally sells below melt value. And this is at the dealer level. So if you equate that into cost per ounce, you're looking at about $19.25 per ounce dealer cost, which is like a 30% premium. Now that's a very, very small subset of the entire silver market, but I like to just pause and think about it for a moment because at one time, in fact during my lifetime, 90% silver coin was so plentiful that it was in the pockets of Americans. And it wasn't until 1965 when the Johnson administration took silver out of the coinage, and from that point till now, there's been no coinage anywhere that has contained silver from 65 onward. So what that means is that all those billions of ounces of silver that were once in U.S. coinage is now pretty much been recycled and moved into other applications or other coins or whatever. So the bag market's very tight. All retail products are very tight. The silver rounds and the government mints, for example, U.S. Mint, backlogged on an allocated basis. You look at a couple other government mints. In Canada, for example, they're just basically closing down for a while temporarily. Silver rounds that usually have a very low premium have jumped their premiums quite a bit. So overall, the round number is like 4 or 5 million ounces of a backlog, which is sufficient to get this premiums up into the 4-week, 8-week, maybe 12-week range, meaning that if you're willing to put up your money now, pay a higher premium and wait, you will eventually get your silver, and I'm pretty certain that will happen. I mean, we're looking at a 5 million ounce market versus a total market of about 800 million ounces on an annual basis from mining activity alone, and nearly 150 to almost 200 million on a really big recycling year, which we haven't had for a while. So you're looking at a roughly billion ounce market on an annual basis, counting recycling, and we're only talking about 5 million ounces in the retail market. Having said that, all markets are at the margin, meaning that the tightly held supply means that whatever is available becomes bid up, and that's exactly what's taking place. Now, has this spilled over into the wholesale market or the COMEX or the, let's say, commercial bar market, wherever the bars rest? And the answer to that is to be determined. There is some slight inklings right now of category changes, meaning bars, commercial bars that the registered category or dealers have moved somewhat into investor hands, and there's some offtake off of the COMEX, probably a little bigger than usual, but not enough for me to stick my neck out and say this is it. It's actually hitting into the commercial bar market. But this is something, again, that's the strangest market. I mean, normally when you start to see premiums on bags jump to the level that they have now, it's usually a very, very clear sign that the silver market will start to move up in price at all levels, meaning the futures price determined on the COMEX. And so you would start to see, as an example, $15 silver, 15.50, 16, 17, that type of thing, in fairly short order. Nonetheless, the price is what it is. I probably belabored the silver study a little bit too much, but it's got me excited because, again, in 4 decades, this has got to be a market that makes no sense as far as the demand side and what the price levels are. I'll be back with you next week with Money and Metals.